Wealth Wednesdays, everybody. We are very excited to have hopefully some relief for all of you because I know a lot of people out there started paying their student loans back this month. And
yes, really, October 1st.
Yes, so we're really excited to have the money coach, Lynnette Khalfani-Cox, who is a New York Times bestselling author of Zero Debt. She's been on over 1,000 TV segments, including Oprah, Dr. Oz, everybody, you name it, Today Show.
Steve Harvey. Good Morning America.
Yep. Co-owns a financial education company, the moneycoach.net LLC with her husband, Earl. So, Lynnette, thanks so much for being with us.
Thank you. My pleasure.
Yes, this is a really important topic right now as we're talking about student loan debt repayment. And when I tell you, I own a coffee shop, and one of my managers was telling me that there's been a lot of people now who are applying for extra jobs because people have to start paying back those student loans. And so I want you to give us some insight. There's a lot of information and a lot of misinformation out there. So we're turning to you to find out what's real, what's not, and what are some things that people can do.
So what happened?
It was paused for 3 years.
What the heck happened?
Yeah.
Well, the big thing that happened is you have to start repaying those loans, like you said, effective October 1st. We went through the pandemic, and obviously there was a period of relief, about 3 years, where folks really didn't have to make payments on their federal student loans. You didn't have the same type of pause on those private loans. Mm-hmm. That's a whole nother story. But we know there's about 45 million Americans who owe federal student loan debt to the tune of $1.7 trillion. And so obviously different people have different amounts of debt, depending on if you had undergraduate degree, if you went to graduate school, professional school, all that good stuff. But, the average student loan payment for a lot of people is somewhere between $380, $400 or so. So now they have to start repaying those payments every single month. And it's a big chunk out of people's monthly budgets. So fortunately, there are a lot of things that they can do. And we're going to, obviously get into it in this segment.
Now, some people did get their student debt canceled, right? Is
Yes.
that correct? Because I know at first they were trying to get this bill passed and it didn't go past. But then the Biden administration managed to still make that available. Can you tell us something about that? Some people might not even know that they don't have to, that they can have access to that.
Right. So you're correct, Angela. We went through this period where there was a big fight that, Biden tried to push through loan forgiveness up to about $20,000, especially for folks who got Pell Grants while they were in school. And Pell Grants, of course, are given to the neediest student borrowers. But bottom line, Supreme Court said, nah, you can't do that. And so immediately when that ruling happened, Biden was like, okay, well, I'm going to take another route. I'm going to take several other routes. He really has been, in my opinion, trying to deliver on that promise of student loan relief. So they did a number of other measures to provide some, kind of financial cushion for folks. So one is they actually did cancel, as you mentioned, a whole, billions and billions of dollars worth of debt for people in specific categories. So some are folks who had disabilities, some are folks who had been making payments and who were under public service loan forgiveness plans of various kinds, but they might have had a technical reason why their loan was not forgiven. Maybe they didn't fill out a form on time, but they were like, look, these people have been making the payments. They should get the relief that they were promised. You had some people who had their loans forgiven because they were in for-profit institutions that had shut down or that had made kind of false promises to borrowers. So that was another category of folks who got their student loans forgiven. But it's been billions and billions of dollars, actually, that has been forgiven, this Supreme Court decision notwithstanding.
So this administration has, I think, forgiven more student loan debt than any other, even though we don't hear about that a lot. One thing I really want you to break down for our audience, in addition, they kind of built an onboarding process into the student loan repayments that started October 1st and kind of put in a lot of safeguards for people. Can you tell us about those? I know, for example, you don't have to pay they're not going to report you to credit bureaus for a year. A lot of people don't know this stuff, so really break it down in a way our audience can understand.
Sure. So, when you have gone from a place of not paying something to all of a sudden having to pay, there's this concept called payment shock, right? It's like, oh, this is something new to my budget. And so they wanted to avoid that payment shock and that sense of, hurting people's cash flow. So they created what they called a 12-month on-ramp period, really to ease the transition back towards paying student loans. So then over the next 12 months rather, if you don't make a payment, or if you are late or make a partial payment, they're really trying not to be punitive to folks. So yes, they're not going to be reporting you to the credit bureaus. They're not going to throw your loan into delinquency. They're not going to put you in default status. Again, all of those things can hurt your credit. They're not going to be adding on extra interest, finance charges, penalty fees, things of that nature. So they're really doing a lot. You're not going to be subject to wage garnishment, which would have been the case before if you were, in a default status, that kind of thing.
And these are
So
just
again,
for federal loans? Is that correct? Just federal loans?
Yes, and
Okay.
all of this is all exclusively for federal loans. You can get some relief, and that's a whole separate track, but you can get some relief through your private student loans as well, but you have to really go to your lender specifically or your loan servicing company. Some of them will have options for deferment or forbearance or hardship cases if you're unemployed, for example. Some of them, if you've just had a baby or, and you're out of work for several months, that kind of thing. So you should always ask if you're in need, but there really are better loan forgiveness, forbearance, and kind of workout options that are available to federal student loan borrowers. And that's what we're talking about right now.
And Lynnette, I wanted to also ask about rising interest rates and what effect does that have now on your student loans? Does that impact how much money you're going to owe?
Yeah. So, some folks have floating interest rate loans, variable rate loans. And yeah, those are going to be subjected to what's going on in the marketplace. We know that the Federal Reserve has raised interest rates about 11 times over the last, year and a half or so. And so any loan that has a variable rate that's attached to it could change. If you have a loan, though, that's a fixed rate, and every June, the government sets the interest rates on federal student loans. So if you have a fixed rate loans, those are supposed to be locked in. But each year it kind of, can go up, and it has been, of course, just like mortgage rates, for example, have pretty much more than doubled over the past year and a half. I remember a couple of years ago, student loans were ultra low interest rates. And again, now those have ticked higher as well. So they are subject to some of the same market forces.
Student loan debt's one of those things that makes you want to stick your head in the sand because it's so overwhelming, and it's been really easy to stick your head in the sand over the last 3 years. A lot of people out there don't know who owns their student loans. Like if you ask them, okay, particularly people with private loans, they don't really understand who owns their loans. Sometimes those companies sell those loans. So even if they want to tackle this, they don't know where to get started, stick their heads in the sand. How can people find out about their loans, federal and private?
Right. Well, first off, don't stick your head in the sand. I call that the ostrich maneuver. It's not going to help. It's going to be a problem. It's just going to make things worse, right? So I do understand, though. When I got out of grad school, I went to USC in Los Angeles. I went to UC Irvine undergrad, and when I got out of school, I had $40,000 in student loan debt. It took me over 15 years to pay it off. So I totally get it. That it's like, it's a burden on a lot of folks, right? And now, I won't tell you what year I graduated, okay? but now it's, a heavier toll for a lot of people. We have a lot of data that shows that people who have, excessive student loans, especially in Black and Brown communities, it holds us back in so many ways, from home ownership, from starting businesses, from getting married, from just saving money, and from reaching our goals. So I understand the reluctance of some people to not want to kind of deal with the problem. But alas, you got the debt. You gotta pay the piper at some point, or you got to figure out a solution. Because honestly, there are
Yes.
other solutions. So first off, if you have federal student loans, you should absolutely log on to studentaid.gov, and then that's the site where the federal government, you'll be able to track and see your federal student loans. They will show you the status of your loans and the amount of your loans, right? And you'll start to be able to see, okay, what options exist for me. So you'll see, is my loan current? Is it, had it been, and it shouldn't be right now, but certainly typically it'll show if there was a delinquency, a default status. They'll show you the amount of debt outstanding when you took out the loans. Because a lot of people forget. They're like, what year did I take out that loan? Or, but I always tell people, you might have forgot about stuff, but the folks you owe, they ain't forget, okay?
Right.
The same thing is true with your private student loans. So certainly if you remember, oh, okay, I had a loan from Discover, or I got a loan from, via Sally Mae, or, I got a loan from XYZ Bank. If you remember that, then of course you want to reach out to those specific lenders or the loan servicing company that might be handling your payments. Otherwise, you can also look on your credit reports. That's a great place to find information. Because again, you forgot, but they ain't forget, and it's on your credit, okay? It's showing you, it'll have your account number, or at least the last 4 digits of your account number. It'll show an address, a phone number, that kind of thing. And then you can reach out to them to contact them to start that process, or to inquire what options exist, especially if you're in a hardship of any kind. If you have reduced hours, if you've been laid off, if you have, a family situation that's going on, and you've, had your cash flow been affected, that kind of thing. It's always a good idea to reach out to a creditor and to let them know the circumstances and see what relief might exist.
And that's very true. I had student loans myself. And one thing that I'm happy that I did was when I couldn't make those payments, I deferred them. And I think I did that like 3 times, but at least I was able to do that, because it would have been worse to just ignore it and not pay it. I was able to, defer my loans for like 6 months at a time until I was in a position to be able to start making those monthly payments.
And doing something like that like makes you feel like you're more powerful, like you're doing something instead of the ostrich maneuver.
I don't like those calls coming in.
I
like,
know, right?
No, nobody wants that. And this is, this is another thing too, because I want to give your audience some hope, especially those who are coming out of the payment pause and going back to having to repay those federal student loans. The Biden administration, one of the things that they did, besides that on-ramp that I mentioned, the 12-month period, the grace period to let you kind of ease back into payments, they actually have tweaked the entire formula for repayment.
Income-based repayment,
they're going to be pleasantly surprised to see, oh, wait a minute, my payments are going to be way, way, way less than they were before. And they did this in a number of ways. So first of all, they are reducing the amount of discretionary income that you have to put towards student loan repayments. At one point, it was like 20%. Then they have 10% of your discretionary income that has to go towards it this year. In 2024, it's going to be 5% of your discretionary income that has to go towards it. So they're knocking folks' payments down in half right off the bat. Then some people are going to, who are basically considered low income. If you're making like $15 an hour, you're going to actually qualify for 0 monthly loan payments. And the good news is that even having a 0 monthly payment can count towards loan forgiveness. So they've created, again, another pathway to loan forgiveness, especially for folks who owe like $12,000 or less. They're saying, well, after 10 years of payments, whatever you owe is just going to be written off. Now, 10 years is half the time that it was before. Before it was like 20 years you had to repay, 25 years. So they're really cutting in half a lot of the ways in which people have to make payments, either by saying you're going to have to contribute less of your available cash, or you're going to pay for a shorter amount of time. So they have this new program that is income based. It's called the SAVE plan, SAVE, because you're going to be saving some money. And that one is replacing what was called the pay plan. It was pay as you earn. And then they had a revised program called revised pay. But basically those two programs are kind of going away. They're being replaced by the SAVE program. So I really would encourage people, go just, show them what your income is and see what your new monthly payment is based on this income-based payment program called SAVE. You're probably going to be very, very, very pleasantly surprised.
Save sounds way better than pay and repay. I just want to
Where
say
where do
the
people
branding
find
of that is amazing.
I know you're telling us more than the
branding
administration.
Right. They were like, okay, let's do this.
Where do people find SAVE?
Again, studentaid.gov is where they get all the information on that for the federal loans. Yes.
So we're talking federal loans. I can't turn on my television. I can't look at my phone or anything until not see some company advertising that they can help me with my student loan debt. There's so many apps. There's so much out there. What do you think of those, and how, a lot of people do have private loans, or part of their loans are private. Well, how do they choose one?
Or how do you know it's credible, too?
Exactly.
Yeah. So in general, I like to see companies that have a decent track record, that have good ratings, that have excellent reviews from other consumers. That's a good place to start. You can, whether it's kind of a Yelp rating or whether it's just online reviews, you can do Google searches, et cetera, and just literally put the company name and ratings, reviews. You can check Better Business Bureau, that kind of thing. I'm kind of like 50-50 on the balance between like history and, a track record. Because on the one hand, you do want to see, you don't want to be the guinea pig. You don't want to be like the very first,
Right.
customer. Like, okay, well, what if this is not, a good customer experience or whatever? But on the other hand, you don't want to just totally rule out a company, say if it has a 3-year track record or whatever, something like that, because we have seen the rise of so-called fintech companies, financial technology companies that are very smart, very into using big data, artificial intelligence, and they're doing this in a way that they're pricing risk. They're just saying, look, we have a lot of information and data at our disposal, and we don't have to give everybody the exact same interest rate. We can see you probably are a better credit risk. And so they are doing, from a financial modeling standpoint, they're doing some things different than traditional banks. So these kind of fintech companies are called neobanks, or alternatives, or fintechs. And again, you have startups, 1, 2, 3 years kind of in existence. And then you have others that have been around for quite some time, whether it's a SoFi or other brands that are out there that offer student loans or offer loan consolidation or loan refinancing, things of that nature. But absolutely do your homework, do some comparisons, get online, check out and see what other people have said in terms of reviews, ratings, and things of that nature. And I think then you kind of just make the best choice that you think works for you.
All right. Well, thank you so much for this timely conversation, Lynnette Khalfani-Cox, the Money Coach. And once again, where can people find you if they need more information?
Sure. They can find me at my free financial advice site, askthemoneycoach.com. We're going to have some specialty content up there just around this idea of student loans and how do you manage your student loans in 2023 and 2024 going forward.
Thank you so much for explaining so much and teaching us so many new things, Lynnette. Always a pleasure.
Thank you.
Thank you.
Way up.